Hello everyone! Welcome back to another exciting episode of the Broiler Chicken Show! Actually, there's somebody I think, or it's a few people have actually said, love the intros. Totally unrehearsed. Never know what the hell's going to come out of Brian's mouth, but it usually works. And actually, I remember when I was over in Europe years ago, one site member had a little 10-year-old boy, and he literally recited every one of my lines, and he's like, bye for now! It's so adorable. You know who you are. I wonder where he is in this world now. Anyway, welcome back to the frivolity. If anything, the fact that, I've been doing these silly videos now for, probably about 8 years. And I'm pretty darn consistent, eh? I mean, geez, I don't take holidays. And even when I do take holidays, they're working holidays. But anyway, what the hell? If anything, that's a good testament. Try and find something that's your passion in life. And as long as you just keep working at your passion because you love doing what you do, it's not really work. But at the same time, too, gee whiz, TRI's gotten to the point where it's like a company now, and so we have a whole bunch of employees and stuff that I have to be all stressed out about. So I do appreciate that running a business like this is challenging. But nonetheless, just got to keep forging on. Hopefully my PMA for the win message is still coming through clearly. Would like to try and help people as much as I possibly can. And I think the amount of free content that we do out there in the world is a testament to that. I do know people who have watched these videos. If you're watching this for the first time, I do know people who have literally taught themselves from absolutely knowing nothing to, from what I understand, off being very active traders in the market. So you can go the self-help route. Takes a lot of work, takes a lot of discipline, takes a lot of patience. Things, of course, that I even tweeted about today. And this is really why I built the school. You might be busy with your career. You might be busy with raising the family. You're not really able to sit and take notes feverishly and watch videos back feverishly. And you kind of need like a nice sort of guided path. Do this, watch this, do that, jump through these hoops, jump through those hoops, and you come out the other end pretty much knowing, I try to actually, the education program that I do is pretty much it's like a juxtaposition. I remember I had a English prof in uni who loved using that term, but the juxtaposition of 30 years now, gee whiz, I got my first job in the business in 1988. So that's 35 years now. God, I'm getting old. Anyway, and literally, one of my favorite stock market stories, analogies, jokes, if you will. I'm just going to check on the YouTube page because I do know that you guys chat over there and I want to be able to watch that. So sorry if I look a little distracted. But one of my favorite stories from the stock market actually came from that very first year that I worked in the business as a credit control clerk for Burns Fry. I don't know if any of you remember Burns Fry. If you remember Burns Fry, then I know that you've got some miles. In fact, Mr. B here in the lounge here said he's going to buy us all business class plane tickets if we do our next TRI meetup in Iran. So I'm awfully, actually I'm super grateful for his generosity. But do you remember Burns Fry? I think you're in Canada here, aren't you? So if you know who Burns Fry is, then I know that you're a veteran. But that's going back a bit. Yeah. Burns Fry disappeared before you were even born. So anyway. All right. Yep, there's the YouTube page. So it looks like we are doing our thing. I got a few people over there. Thank you very much, Chris. Chris, everybody give a round of applause for Chris. He's the one who puts together all these fun little shorts. along with Josh, and of course he keeps me on the straight and narrow. And look at what the boys have done. Oh, I'm all social media. Look at me. Actually, there you guys over there, right? I got to look into the camera more. Anyway, so you got to that's got to be a clip, Chris. Make a note of that right there, right?
I need also finger guns, and if we're going for clip material, trading with Brian Beamish. Give
There
us
you
some finger
go.
guns when you do that. Yeah,
Perfect.
thank you.
Actually, I even said I got all pretty. Of course, I've got Liam after all of you guys here this afternoon. So I've got Liam today. So I have to look somewhat pretty, but I got especially pretty for all of you out in social media land today. The question is, did I wash my mouth out? Because I'll tell you, I don't know what it is about social media, but it sure brings a potty mouth out in me. But anyway, here we are. Okay, so just to understand, the primary purpose for this Sunday show is to speak to the level 1 audience in case they had any questions, especially in years gone by, especially at the very top of the market. P.S. We pretty much know exactly when the next market top's going to come in. So if you want to know when that is, maybe consider joining our community. I think we've got that pretty well timed. But at the tops of these crazy markets, we get like 100, 200 students in the program, which is a lot because we actually like to take a very hands-on approach with students. So having like a student body of 1,000 students, that doesn't make any sense with this program the way that it is. Anyway, I guess just the point is that, I can't remember. I got distracted. What was I talking about? I talk about being an old man. Talking about market cycles. Well, anyway, the purpose of this, oh yeah, that's right. Talking about the student body and all that. The purpose of this show is to speak to the students because, Grim, awesome teacher, way more patient than I ever am. It's beautiful watching him go through the motions as well, too. He works basically a full-time gig in the software industry as well. So, but, if we have 100, 200 students and, they're going to ask like 50 million questions, it's a bit overwhelming for the guy. So the whole point of this Sunday show originally was just to sort of, if there's any extra questions, you needed further explanation, Brian was here to act as a backstop. I just wasted probably, I guess, everybody about 10 minutes of your time. My apologies. Maybe Chris, you could even sort of mark, at about, what is that? Maybe about the 10-minute mark, 15-minute mark, Brian actually starts talking.
Yeah, about an 8-minute intro. Nothing wrong with that.
All right, cool. Thanks, sir. He's my boss. So what I think makes sense is they're still in class right now, and they're going through some pretty thick modules right now, especially level 1ers. Steep learning curves. I don't know whether they're out of eating their vegetables yet. And they're actually into the candy store. But this is tough learning, and you got to get this stuff down cold. So anyway, Grim's doing his thing, rocking it. Shark Toshi's in there helping. Peter, I think, is also in there too. So as soon as they come out, we'll jump into Q&A. If the program right now, actually, admittedly, you see what Bitcoin's price has done over the past year. The classes are small, on the small side. If anything, that's better. Take the education program now if you really do want to learn how to build a small business of trading, because that's really what we teach. Man, get in there now. So, because like I said, at the top of the market, it's ridiculous how many students there are in there. Anyway. So the first part of this Sunday broadcast, we'll talk a little bit about market analysis. And what I've done recently, which is trying to keep me focused, is, and that's tough to do with me, is I like to spend Sunday morning tweeting out a weekly chart with some summary notes, a daily chart with some summary notes, and then a 4-hour chart with some summary notes. I think we'll leave the 4-hour analysis, the analysis to 4-hour. I'll call that lower time frame. Of course, day traders, I go all the way down to like the hell. We even have guys in the day trading room who trade off of bar range charts, so the time is irrelevant to them. So, and I was actually trading with Chris. I was using a 20-second, was it 20-second or 10-second charts to plot out the opening range trade so you could really see the range well. So the great part about actually what we do teach is the idea of that the market is a fractal, like if you ever see Mandelbrot set, and how it just goes on endlessly, and the iterations, it's basically infinite. So ironically enough, everything that you learn off of like a weekly price chart to make good investment decisions, it's the exact same thing off of like a 1-minute chart. Obviously, the degree of liquidity in a market will definitely determine how susceptible it is to effery, right? We're going to try and keep this potty mouth in line, so Brian will try and refrain from swearing too much. So, and then especially the degree of maturation of your asset will obviously dictate the degree of liquidity. So if you're dealing with something like a venture capital name that is not very mature, the share ownership is very thin. It's not really that liquid, quote unquote. Obviously, if you go down to lower time frames, it's the asset is much more manipulatable, if you will. So, and actually, generally speaking, it's probably not a bad idea that you maybe refrain from trading like El Tangonator, 5-minute setups off of the shitcoin du jour, because half of the time, the pumps are just probably fat fingers, and are somebody sneezed. Oh, is that a buy signal? Market buy. Boom, up goes price, and of course up goes price. And usually, what ends up happening is price goes right up into our sell orders. But Brian was a little sloppy this weekend, though. Missed a good one. I didn't think it was going to happen as quickly as it did. Like literally the next damn day, the damn thing took off. I mean, hell, I don't mind sitting on a winning position and just let it work. But there was an asset that did double from our recent tout. And there were people on the site who were banging out doubles, selling into that rally. And I think, 9 times out of 10 when that happens, usually it is because of TRIers, or maybe, let's say, people who have bought into Brian's crazy notion of selling half on a double and just establishing risk-free positions. You can almost look at the order book and go, yep, that's a TRIer. Yep, that's one of Brian's students. Yep, that's one of Brian. I can see exactly where they are on the DOM. Anyway. So we'll see how that goes. I do have my open order working, but I was a little bit lazy. But anyway, like I said, sitting on a winning. I'm only up 50% on my money now. Well, I guess I can live with that. Anyway, and actually, what I often tell people, and I think it's something if you're watching this for the first time, that you should note this: that really you're only as good of a trader as you are at how well you can follow the plan it is that you put into place ahead of time, and the rules that you had laid out that you said you were going to follow to make money from trading and run my plan of making wealth in the market and blah, 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 blah. So you could argue that those little mistakes, they're a tell that maybe Brian's not nearly as good as he thinks he is. Got to sharpen things up a bit. Anyway, probably good journal entry, also a good demon finder entry. And if I find that you keep making the same mistake over and over and over, gee whiz, I'm just not getting those open orders working on the sell side. And I missed another one. You can actually look back. One guy that I used to work with a million years ago, he used to force us to write down our mistakes when this was prop trading days. and then write down how much money did that mistake actually cost you. And then that way, at the end of the week and at the end of the month, you look at all your mistakes and you go, 20 grand? Oh my God, what am I, an idiot? All right, I better address this. This is getting serious. Anyway. Okay, so on to the analysis. A little bit of rhetoric there. Sorry. Chris gave me the green light that it really wasn't that bad to do the intro. So unfortunately, I think I had to throw in some more there. So anyway. Okay, so as I said, I like sort of the first hour of this show, first half hour, 45 minutes, however long this takes. And then when the school's done, we'll open up their AMA document and speak to them. I don't even know if there's any questions here or not. There might be, there might not be. Yeah, looks like we got a couple questions. So we'll speak to those. And if there's any time left, you guys all know I got to hit the road here. Usually around 1 o'clock or so, 12:30 Pacific time. I've gone ahead and prepared. Like I said, got myself pretty for Liam. Got all the snacks and stuff that he likes to have all ready to go. So I can just literally hang up and go. So we've got, I guess, it is now 10:52 my time. So we got about an hour and a half. Well, let's call it an hour and a half or so to work with. Chris is going to go through and he'll sort of mark up the chapters of this video, which I totally am so thankful for. So when we sort of move on to a new topic or something along those lines, hopefully it'll be noted on the video to maybe save you a bit of time. So without further ado, let's get to work. So as you can see, I produced these Sunday morning. We can always go back and look at them, the price action in real time. It was really interesting how last week when I did this, we had conjectured through the video whether this was going to turn into some crazy ass hammer. Because you remember we were heavily red while I was doing the video. And we were literally watching as the banksters all came out and said, well, I guess we're not going to let this bank fail. And all right, I guess, well, and then the politicians were like, no fucking way, you're not going to get us to pay the bill and all that. And so it's all back and forth and back and forth. And the irony of it all is that if you do get Jerry to turn the printer back on, then what that just simply means is there's going to be more price inflation down the road. I've talked to you guys at length about M2 money supply. And if you need a refresher, every single public video, I mention it. In fact, very better to show you where the link is. If you happen to be on the website and you're trying to figure out where the hell these links are that Brian's talking about, how markets work, do yourself a favor. Actually, maybe that's one of these. Here we are. How nature, markets, and economies work. Go do yourself a favor and watch this gentleman's 3-hour lecture on money. And, the great part about it is this lecture, it's historic, it's classic, it's spot on. And unfortunately, nobody will address this until, ironically, when we actually have situations that are going on right now, right? The whole reason why these banks are going under is this fractional reserve banking. That's the whole reason. It's just the issue was that interest rates were so low, these banks had all these deposits coming in, and of course, fractional reserve banking, if they have $1 million of deposits coming in, that means they go into the market and buy like $100 million worth of assets using the $1 million as collateral. It's probably a little bit exaggerated, but you get the idea. So all these, regional banks, and frankly speaking, I don't think it's just contained to these regional banks. I mean, Debit Swiss, I think that's what we're calling it now, not a Credit Suisse, Debit Swiss, which I thought was funny. Anyway, that's a national bank scale. And they obviously had issues unto themselves, and I suppose you could argue the ultimate bottom in this entire fear cycle was when things like Deutsche Bank and Swiss franc, Credit Suisse, and all those European sort of behemoths that were carrying just ridiculous bureaucracies and just ridiculous overheads. And then add insult to injury, yield curve duration risk just got them. They had people come in and deposit money. In Europe, if you were actually depositing money, you actually had to pay money. That's how screwy this world is. This is the number one reason why you should not fuck with your current country's currency. And the worst part about it is it's our generation that's going to have to pay the penalty for this. And the rest of all of your guys' lives, you are all going to go to your graves going, don't fuck with the country's currency. Because when you do, we have to go through the insanity of what the hell you've seen over the past 10 years. Now, the good part about it is that there is technically a currency out there that I think was built by the 1% to basically give them an out, right? George Bush and all his buddies. And that's his Bitcoin thing, right? I mean, you got Da Vinci going, hey, I'm not from a buck. And here we are at what, 20, 30 G's? What? So, obviously the people that created Bitcoin, I mean, how much wealth does like Satoshi Nakamoto, whoever that is, do those wallets actually contain now, right? If you had 1 million Bitcoins at 27,000 bucks a coin, we're trying to talk some serious money. So, and you know what I found amusing? I couldn't believe it. Guess who, of all people's companies, Jerry Powell works for? If that's not the icing on the cake. Somebody gave me a number. I can't count that high. I don't know how many zeros is that. 1, 2, 3, 4, 5, 6, 7, 8, 9. So what is that? 272 billion? Is that what that is? Holy moly. But guess who? Guess who Jerry works for? He worked for George Bush Sr. So if that isn't a tell, I wouldn't even be surprised if Jerry owns a shitload of Bitcoins. He'll probably never publicly disclose it. But it wouldn't surprise me. Anyway, all right, so on to the analysis. So we have that, if anything, I guess the adage, the cliche, I've been at this silly game for 30 plus years, is, number one, don't fight the Fed. So now you can all see how dangerous it is to fight the Fed. And that scares me now because I'm not quite sure what Jerry's going to say this coming Tuesday, Wednesday. This should be interesting. But also too, if the image that I put out through the week, I'm sure I had a tweet in it with it somewhere, is it kind of feels like Bitcoin itself kind of was clued into, where is Jerry? There he is, right? This kind of notion that, you could raise the debt ceiling, or not, right? I suppose you could legislate, you could taxpayer bail out the way through this. Or, what this guy might do is he might just go turn those damn printing presses back on. And I get the impression that that's, the adage is don't fight the Fed, and the Fed is going to keep raising interest rates until they can't. And I think that's the important lesson here. And what I mean by that is they just keep raising interest rates. They want the economy to slow. So they're just going to keep raising interest rates until they actually break something, right? And something actually breaks. So I think a lot of the bank crises and stuff like that you're seeing, I think actually something is breaking. It's just simple as that. And, like we said, and, this was it was fascinating how this came in right at this megaphone level. And what was really interesting was I had short setups that were working. I had, like, the algo told us to buy here, which, ouch, that was a bit early. I put this tweet out. This is like typical public, like, hey, you're killing me. The irony of it all is that this was a drawdown of about 12%. So, it's 12% is 12%. That was on this cross here. So this dump, the algo never did go further bullish because look at teal. I mean, teal's basically at zero. How can this cross back down below zero? So we had to endure the meltdown in Bitcoin. And if anything, this is a really good thing. Write this down as well. That usually the biggest, chunkiest thing, like if it's the stock market, usually the S&P 500 or the Dow Jones Industrials, when it finally capitulates and pukes out, that's the end of the move, not the beginning of the move. So if anything, probably an interesting analogy of that. The broader market in crypto was basically washed out. This is like the top 30 names. And keep in mind that this signal is in the context of this backdrop. So this weekly commodity trend survey, it just simply asks, where is price in the relative range? Is it near the top end of the range? All the, public's coming in and buying and FOMOing, and this time it's different, and you've heard all that nonsense. Or is price down at the bottom end of the range? And the public has no interest. They've been wiped out because they bought the top, and they don't even mention crypto to me. Oh, la, 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 la. And ironically enough, as smart investors, that's when we got to come in and start buying. And this algorithm is specifically designed to highlight that. Where like fives are like, the asset's pretty close to the bottom end of the range. Here, there's Algo, for example. Price is 20 cents. 52-week low is 16. The high is 99. So our 50% level is 57. So you can see if I buy this here and all I get is just a 50% tag, that's more than double. Hell, that's almost a triple. But the weekly S13 EMA, our fast moving average, is below the 30 SMA, meaning momentum is still to the downside. When it crosses back up, so we're at the bottom end of the range, the 50% level. This looks pretty sexy, gets 5. But momentum-wise, if this crosses back up, then that will launch this into 6s. And 6s are ooh la la. So notice, second guy on our list here, Bitcoin. Bitcoin, tastes great. 21,900 and change, call it 22. And I don't know, that's obviously a pretty old price. I don't know how long ago that updated. When this last updated, and Sjord, if you're watching, it's probably not good that, maybe actually I probably have to hit the refresh button. I don't know when the last time I refreshed this page was. Nope, still there. All right, so obviously the API is not picking up current data. When this was current, Sjord, at 21,000 and change, when was this? Ooh, the 5th of March. Actually, that's 2 weeks ago, isn't it? Sjord. I think we have a... Anyway, point here is 50% level. Sitting, where's the 50% level? That wouldn't change. So 52-week low, 15 and change, high 48 and change. Holy crap. Yeah, this is the last year? 50% level is 31. So even here, it's not a monstrous move, but it's about 50% from there. I suppose we're still going up. Probably going to fall out of the 6 category. Because usually to B6, we need to see the price of the asset more than about 25% lower than the 50% rule. So that might be falling out of the 6s. I'll remind Sjord to make sure that this data is updating here that before I leave for Liam here this afternoon. And there's your fast moving average sitting at 21.5. The slow is 19. So we have price substantially below 50% rule. And the fast is above the slow. So that gets a big fat 6. Woohoo! And of course, 2 weeks ago, that was, I guess, the hammer candle that he's painting there. There is the moving average cross, and there is the range, right? If we did 50% level, it's right up in this area here. So we like 6s. 6s are good. 6s are very, very good. And look how many 5s and 6s there are on here. Better make sure this is updating in real time. But gee whiz. And I think, what's really interesting is you go right across the market and there's not many other assets. In fact, there's none that are actually spitting up actual buy signals or sixes. So actually interesting. I think crypto's in a very interesting spot here, and it has been for a while. So that image, let's go back to the recent weekly tweet. Boom. There is that moving average cross. So our system seems to be stuck here. You can see that candle low, but it hasn't taken the past week's price action into account. Maybe when the system updates tonight, being Sunday night, I'll have to check with Stuart to figure out when that actually is updated. That 6 will be gone. Keep in mind, that's a weekly commodity trend survey. Weekly, that's the key there. So, point of the matter here is last week we had sort of a break in the system. Banks starting to fail. Woo, sky's falling. And like literally on that, and what's fascinating is, you wonder whether the market was setting this trade up because, on the lower time frames, like when we were looking at things like this is a daily price chart. This is an extremely well-defined megaphone. And I remember when we were talking about this on the site. This is our daily chart now. We started drawing out these megaphones. Hell, you even had old timers in the stock market like Peter Brandt coming out going, hey, this looks like a megaphone. Better be careful. And frankly speaking, I think he's right. But what's interesting about this is 1, 2, 1, 2, 3. This is a buy signal down here, a 3 here. And 3, 1, 2, 3. This is now a sell level up here. So we get any kind of bearish reversal up here. And this megaphone fires. Price target's got to be right back down against these lows here, folks. So, unfortunately, megaphones are megaphones. They're almost like designed to suck you into the bull side. Get everybody. I mean, look at this face rip. How many people do you think are like calling their brokers up tomorrow morning and going, hey, have you seen that rally in Bitcoin? I better get in there and buy some. Yeah, you're going to have a lot of retail people that are going to be coming in on the buy side here. And it scares the hell out of me. And I've talked to you guys in the public about this. FUMC, hey, I'm a bull. Look at me. Higher highs and higher lows. That Beamish guy says buy W's, man. You'll get rich. Look at all the W's. FUMC comes in and kaboom. This one wasn't so bad, but, hey, look at me. Highs and higher lows. I'm a bull. FUMC, kaboom. And then the saving grace about this one was there was a U.S. government hearing, and like literally as soon as the government hearing started, the selling like literally stopped on a dime and price started to rally back up again. So, the U.S. Senate saved Bitcoin from the last FUMC. Now, do you think there's any emotional weight involved in this particular FUMC coming up here? Oh, boy. I literally heard like old-timer stock market dudes. What's so funny is, the boys, Josh, as our marketing guy, they're super gung-ho about us doing these YouTube shorts and all that kind of fun stuff. Now I'm on camera, right? There's a screenshot for you, Chris. You got another one. So I don't know whether you can take that there. Or there's another one for you. Anyway, I'm not quite sure. Now I'm all distracted. I'm worried. I mean, so I was there's this there's a guy on Bloomberg who's been around forever, and he's sort of their old time market technician. And whenever I tune in, he's always like, well, I'm watching copper prices. I'll tell you, copper, professor of economics. He's going to tell you which way this market's going to go. It's you can always tell an old timer in the market if they know who the professor of economics is. Anyway, he's even coming out on shorts and going, oh boy, I'm waiting for what the hell Chair Powell says. I'm waiting for the chairman of the U.S. Federal Reserve Board, not Not Chair Powell, not JP, not Jerry, not Mr. Powell. I'm waiting for what the chairman of the U.S. Federal Reserve Board has to say. So, needless to say, this Tuesday, Wednesday is going to be a slightly high anxiety, folks. Just be prepared. The issue for me, unfortunately, is that I'm not allowed to chase. Now, the good part about it, I think I showed you off of that previous tweet that I had on there. Chris, YouTube says it's a good time to throw in a commercial. And I hate these channels that make you sit through the whole goddamn commercial. You notice it's always like the SNL ones. If you're watching any sort of corporate presentation or anything like that, they do not have the skippable ads. So if you're gonna put a commercial in there, Chris, at least be generous to the public and let it be skippable. And then that way they don't get pissed off at us. I don't know.
Already done. Already done.
You're a sweetheart. Anyway, and I see, look at that. We got a couple donations. Nore, my German bodybuilder. That guy could probably bench press me in one-handed. Thank you very much for the donation. And Paul throwing in a rack of wand, or a whack of Rons. I'm gonna have so many Rons build up. I don't know whether they keep them in Rons though. It would be interesting. I don't know whether YouTube does a currency conversion. It would be cool if they just kept them in Rons, and then that way, if I ever did visit Romania, I'd have a big whack of Rons all ready to go to spend. But I have a feeling they convert them. But anyway, thank you very much, Paul. I appreciate it. So the point here is I'm not allowed to chase. It feels as though, I also drew this very wide channel. And I find it interesting that the midpoint of the channel really has defined our recent highs of late. And, here we are flirting with this. What I'm worried about is quite often with these megaphones, you'll get sort of a blow off through the top of the megaphone. And FYI, this is one of the most powerful trading setups you will ever see. It's definitely one of the most profitable ones, where people will literally, there's, kind of like our rules about trend lines. Are you allowed to just buy a break of this trend line? No, that's dangerous. If anything, what you have to wait for is like serious, like market structure. I mean, give me a W, give me like strong momentum push. Give me, key reversals, big fat W's. Stuff in here on top of these lines, and then see the follow through to actually believe this, because this actually sets up a really powerful trade setup where you go up above and everybody's like, oh, it's a bull, we're all gonna get rich. Then you go am out and oh boy, kaboom into those lows. And I used to have a student of mine who used to trade these religiously, Greg Pop, and he used to be like, because I always teach the students that it's a good idea to have like a good 2-to-1 risk reward. My bot setup that I like to trade is a 3-to-1 risk reward setup. And he's like, Brian, why do I bother with that pansy ass shit? That's a waste of my time. And yes, traders do talk that way. And he goes, I got this setup. It's called for whatever it's worth. If you want it, who's like a really, really good source for this kind of information? It's just nobody in the market talks about him, which is so weird. I mean, it's bizarre who in this 21st century has become sort of a star in this technical analysis feed. I mean, I have the weirdest people that are like total sensations and all that kind of stuff. But this guy, I think, is one of the absolute best. The only problem is I don't know where I have him. Where are you, Mr. Blutowski? Does anybody know what movie Mr. Blutowski is from? Blutowski. What is Mr. Blutowski doing? Maybe over. Where is Mr. Mr. Blutowski? I don't know where Mr. Blutowski is. Over here. I know you're in here somewhere. Where are you, Mr. Blutowski? Huh, isn't that interesting? I should try and... well, I guess I'll just do a Google search. I know he's in there somewhere. Terrible. Actually, you know what? Oh, I gotta try one more. I really should be able to do this. Should be a non-crypto resources, and he should be right in here somewhere. Pattern. Where are you? Maybe, is this it? Yay, there he is. Bulkowski. Oh, it's close. Yay, very good, guys. Yeah, you know who Mr. Blutowski's from. So, Bulkowski. This guy is, he's the guy who started all this shit. Yeah, I mean, look at the website, right? Doesn't this look like it's like my 1980s website? In fact, it's actually quite updated. This even looks much, much newer than what it used to look like. Anyway, and on here, this is where, yeah, see, now this is what it looks like, right? Oh, yeah, you can even see, well, no, actually, that's not true. Expanding wedge. This is what it's technically, broadening wedge, something like this, ascending wedge. Well, that's not exactly what I'm looking for. I thought there was, anyway, so this is where, this is basically where I first learned about this kind of stuff, and this is forever ago. Broadening bottoms. Anyway, somewhere in all this, we don't need to get all wrapped up in the search of this guy's site. So, in fact, actually, I think he even has like a really cool little sort of it's not exactly what I'm looking for. Anyway. Have fun. Go and search on this guy's site for all the different patterns and stuff. But anyway, so that's where this Greg actually guy, he got the expanding wedge sort of idea from. And I'm, you know, like, geez, I've been in the business forever. Of course, you know, you learn about all these stuff over the years, then you sort of forget about them, then they get reintroduced and all that kind of stuff. So, I mean, I have no idea what the hell this is going to look like up here, but be forewarned. This is actually a pretty typical trade setup, and it's a huge risk-reward trade. I mean, just monstrous. And what I'm worried about is this is so cliche. I mean, who can help finish this statement? It's really simple. Buy the rumor. How does the rest of this statement go? Cool. No, but you're supposed to say like the horse icon, rooster icon. Isn't that your mantra? All right, well, at least some of you guys remember this. I mean, seriously. And if you're all like, you're over there with YouTube and you're watching this video later on, and you're like, what the hell is this guy going on about? I mean, you should all have your journals out. As I blab away here endlessly, there is value in what I'm trying to impart on you guys and girls and houseplants. It's just, you never know when this crap's going to spill out. And this is one of those nuggets of wisdom. There you go. Thank you, Cole. So I'm not even going to say this, but I'm just going to show you guys on YouTube. All I'm going to do is just show you the last statement. So everybody, you can pronounce that out yourself because I've taken a vow of clean potty mouth because I really want to get these YouTube viewers and the subscriptions up because frankly speaking, I'm kind of shocked why our viewership is so low. So let's actually take a moment and let's ask everybody if you could kindly hit the like button if you are enjoying the comic stylings of Mr. Brian Beamish. I'll be appearing this week through the next decade in the Lido Lounge on Discord. Right? We're all moving to Discord, by the way, at TRI, so you should be all be excited about that. So this is a very typical, and this is what worries me, right? Is we know there's a really big event coming up here. Like I said, Bloomberg Television themselves is saying, I'm waiting for the Fed. I'm not doing a damn thing until I hear what these damn Fed chairman of the Federal Reserve. And of course, this is his moment in the sun. And you can see that in past FUMCs, the other side of it can sometimes be extremely painful. This just happens to be a couple examples. We can go back over time. In fact, it'd probably be a good idea to do that one day and just show you. So the interesting thing, though, is that that's not now. And you might argue, kind of jumping a little ahead of myself here. But in fact, actually, let's back up. Before I get into that, let's go back to our weekly chart. Kind of get some religion here. Where are we here? Where's that Twitter thing? There it is. All right. So what's the higher time frame message? What's the bigger picture? The bigger picture message is, I think the market was kind of humming and on. Last week, especially with the way that, the higher ups, the 1%, were all going after crypto with a big heart on recently. I wouldn't even, this SBF guy's still got to stand trial. This is going to look uglier than ugly. I saw that over the past week or two, there was a fairly large U.S. law firm that launched a $1 billion class action lawsuit against FTX and its principals. So that is still ahead of us, folks. And, somebody even asked me, Brian, what do you think the odds are we trade back down to like 20,000, 25,000? I was like 100%. I mean, all this is, at any given point in time, you should expect the market to do 38.2 bounces. This is the definition of a dead cat bounce. So it's not like we're in a new bull market. I think we have a very well-defined chart pattern that actually at the bottom end of the range, with moving average momentum signals telling you that we've turned back to the upside, it really shouldn't surprise us that we see these, in this case, an inverted head and shoulders pattern. And if you measure the inverted head and shoulders pattern, this is 200% of that range. This is what I like to call the parking garage, which actually this is a topic that we teach in our level 1 program, the Introduction to Fibs. We teach things like the 38.2, reload zones, parking garages, just as good trade location ideas. I think I will be incorporating Feigenbaum into the education program. I have actually done a free tutorial video series with the people at Coinigy. I don't know whether they've actually gone ahead with those videos yet or not. I think they're still sort of scratching their head. Keep in mind, they are technically kind of part of Wall Street right now. And I'm sure the management probably looks at me and goes, I don't know about this guy. Anyway. And interestingly enough, if you were able to watch those videos, and I basically did exactly the same fib studies off of those tutorials, even back here, I was kind of like, well, based on Feigenbaum and 38.2s and reload zones, probably we've got pretty good odds we're going to head up into this area. And frankly speaking, with this hammer reversal and break to new highs, you can see there is Mr. Feigenbaum's 2.618. I find it very hard to believe that we are not going to hit that level. I can't see how that can't happen. I've been working with these crazy foggy boggies. I mean, you can even just see right here. Look at this beautiful consolidation and bang. In this particular case, we didn't even stop at 2.618. And I was wondering, why did the market not get up into that 4669? Was this... it needed to happen before we could actually move higher? I don't know. That's a tough one. Now that the market did come back and actually break this 2.618, and then we reversed, I think we have a whole new Feigenbaum set to work with. And this reversal, this energy in this right shoulder, this is a really good testament to the inverted head and shoulders concept. Because, if anything, point and figure people, they look at this and they love this. This is basically the accumulation of energy. And they would use the horizontal count method to actually come up with some pretty realistic price objectives. In fact, the level 2 program, they'll be doing it. I don't know whether they're at that stage yet. I think they're actually still being introduced to the futures market. But I think the module following, or maybe they did point figure charting. But anyway, this would be a really good assignment. Sharky, you're here, aren't you? You're the level 2 instructor. Have they done point and figure charting yet? Because this would be a really good assignment. In fact, actually, why don't we just make it assignment? Anybody who's in the level 2 program right now, I want you for this coming week's daily briefs to post what the horizontal count, point and figure price objective of this consolidation should be. Yeah, there's a fun assignment for you all. And actually, it's pretty darn accurate. It's remarkable how accurate that is. But if you guys haven't done it yet, then that's a bit of a problem. So, anyway.
FYI, Brian, we've got about 10 minutes before an hour in.
Oh, okay. Gee whiz, Brian talks a lot, eh? Okay, so I could probably spend an hour just on this chart, eh? I mean, you see all the reasons why I think this market can move up here. There's a bunch of them. Having said that, there's our recent low, and here's the high now. I mean, am I going to say, yeah, you can just go buy that, no problem? I mean, if you buy that number right there, you have to be able to, at the very least, risk down to a break of this low. And I can guarantee you, any of you guys trading on margin or leverage or anything like that, there is no way in hell you can handle that kind of risk. So, yes, this is a whole bunch of reasons of why I think the market needs to move up. And it has validated a whole bunch of readings. It'll be interesting to see whether we can actually close solidly above this 200-period weekly moving average. Interesting, too. I wonder how, remember they were saying there was a weekly death cross or something like that? I don't think that worked out very well. So anyway, the point here is if we can actually start closing above this 200-week period moving average, that is a very bullish sign. So in the near term, I think there's a pretty good case to be made for, ironically enough, nothing more than just a 38.2 tag of the entire range, which is what we should expect to happen at any given point in time. So if you want to mark up your charts, try and understand some of the logic behind these levels, please go back and watch all of our free videos. If you want to be taught formally in a formal education program, of course, that's what our school is all about. And, we sit there and we'll work with you guys. If you're going to probably take level 1 to understand these red boxes and this teal box and the parking garage. Level 2, you'll understand things like moving averages and trend lines. And, we'll also sprinkle in fog and bomb and stuff while we go, but that should be part of sort of the level 1 education program. But everything that you see on this screen is actually taught in our education program. You too can do charts like this. All right, so that's the higher time frame weekly perspective. Think weekly commodity trend survey. The 52-week range, 50% level is up in this area. It's probably that dotted line, although I have Mountain Man's probably going to get tagged here. Notice Mountain Man lines up perfectly with 38.2s. I would be willing to bet dollars to donuts that Paul guy that I do the Wednesday shows with. My hunch is he's probably already got the open orders working at that 61.8 to hit it. So we'll see how it goes. Suppose we can check in on him on Wednesday. I also noticed too notice how in 3 weeks, 1, 2, 3, bang, 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 the asset lost like 50% of its value. So could we have a 1, 2, 3, bang, 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 3 weeks, the market jumps 50% in value. It's not unheard of. It actually really isn't too shocking. The only people who are going to be shocked, of course, are the people that are like, hey man, I didn't get in. What the hell? I don't really like taking the trade at the neckline breakout of the head and shoulders because the risk reward, really you should expect that this low is going to be tested and that's your 200% is your target. It's probably like a 1.5 to 1 risk reward. As I said earlier, the really good traders, they hunt things like 4 to 1, 5 to 1, 6 to 1, 7 to 1, 8 to 1 risk reward. We had an option spread trade that we talked about. I tweeted out there a week or two ago. That was an 8 to 1 risk reward. I mean, those are the trades that the real pro traders take. And they just, 8 to 1, they just make wicked amounts of money. P.S. I think she's actually probably one of the only banksters in this world that you can actually trust. And we should all give a big round of applause for Caitlin trying to keep, I actually think that there is a coordinated effort by the money center banks, the federal sort of people, that cartel, and it's of course all centered around New York, to try and bankrupt all the regional banks. And she's sort of in there. Ironically enough, she's going to actually try and work with elected representatives in this place to try and undermine the plot by the FOMC and that cartel to basically put people like her out of business. Because she wants to open up a regional bank in like Wyoming just to serve the crypto community. So good luck, Caitlin. Really proud of you. Just keep on the good fight. And you better wear a bulletproof vest because these guys play hardball. Sucks. These guys play hardball, no doubt about it. If I've seen, again, go watch. You need that Money Masters video as a remander. These guys, they play hardball. But anyway, I was mentioning just there earlier. We found, because we do an options education program at TRI. I used to be an options broker, remember, and that's a damn difficult license to get. So, I mean, I should be living in some fucking 6-7 figure income life if I just kept my nose clean. And just because the options broker's license is almost impossible to get, I would have basically been made in the shade. It's just that I can't keep my mouth shut. And whenever I see the absolute corruption of our society, I get angry and I get pissed off. And I had to leave the industry because I was just so frustrated with it. So anyway, point of the matter here is this is a very typical options trade that I would tout to people. You spend about 60 cents, high 50s, low 60s, and the max profit on this trade, just having the asset called away from you, is $5. So 50, 60 cents into $5, you do the math. Could a guy put on like 10 contracts? So that's now 500 into 5,000. Could you put on 100 contracts? That's now 5,000 into 50 G's, right? Or 48 G's. Could you put on 1,000 contracts? Well, that's the way these options guys do it. So anyway, I don't even see any reason why this won't play out. And this is an interesting GAN concept that typically markets like to retrace 50% of their 52 rate ranges moves in about 50% of the time. That would be a normal, healthy market. So you can actually gauge how long this market takes to get back to the 50% level as a proxy for how healthy this bottom is. And if we just go shooting up here, like I said, you might just find that it was like 3 weeks elevator ride down, 3 week rocket ride right back up. And if that happens, right, just boom, and look at us, we're pressing the highs here. If we just go straight up, that tells you this market is damn strong. So go figure, eh? All right, so there's your weekly chart. I think I talked that into the ground. Daily chart, like I said, I'm thinking that there's some sort of top coming into this FOMC event. Doesn't mean it's here today. And the thing is FOMC here is basically on Wednesday. So what can they do here? Here's the calendar. What can they do here between now and when he has his speech, and then usually the market just absolutely collapses on the other side of his speech? What can they do to Bitcoin price here over the next 3 days? And so this is now, you see that backdrop. I'm thinking some sort of top. First off, do we have any signs that the top is in place now? No. Momentum looks extremely strong here. I did actually, I think I heard somebody say this was a divergence here. I think Colin called it a hidden divergence. It says to all intents and purposes, I think that divergence statement is correct. How you actually use that in a trade setup, I'm not quite sure. RSI broke to new lows and actually went oversold, so that in itself was a reason to think end of the move. I was really lucky, and I dumped shorts positions into these 2.618s. That was a rather fortuitous trade. So, how are you going to be in on this move here? I missed this bottom. There was a guy actually on the site, Mr. Dun, 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 dun. Welcome back. Terrible singing, I know. Anyway, he was actually barking about bull divs on the lower time frame charts. I don't know whether he took a trade off of that, but hats off if you did, sir. This consolidation here, now we'll go down to the the lower time frame chart for your sort of analysis. Did this maybe frame something you could have done? And I think the answer was yes. So algo is still long. I missed the long here, but the sharpshooter traders, I can understand that they did have lower time frame divs, and like I said, I think Colin was even talking about hidden divergences down here. I don't really teach or use hidden divergences, but hell, maybe I should. So what does this move look like? How would you have played that? I mean, like I said, bottom of the megaphone, that actually technically is a trade location. So hats off to you if you had said, hey, trade location, 1 hour bull divs. Yeah, they're sloppy, but what the fuck, let's go. And I think there was a cute little bottom in here, and way to go. That would have been a hugely profitable trade. So congrats to you if you pulled that off. If we go down to the 4 hour chart, and we'll finish sort of this commentary on crypto and then head over to the Q&A following this. This is how I think that sort of played out. So as I said, algos, and the algo I think actually was pretty accurate. It's just this thing measures sort of broader market strength and weakness, not really setups on Bitcoin itself. And really, I wanted to, where are we here? I wanted to just test drive this and take every single signal that it gave and just see, what is the end result at the end of the year. So it had me buying there, and I just bought. The algo says buy, so get in there and buy. We had to go through a chop period here, and interesting enough, through that period, the broader crypto universe had to try and bottom as well. Then when both of these darn things bottomed, of course, then we're into orgy mode. So that's like March 10th right there, and you can see the cute little double bottom on the universe came in March 11th. So all around there, we are fully into rally mode. So where the hell's that? So that's, ironically enough, there's 10th, there's 11th. So broader market saying go. Of course, I covered my manual shorts. I shorted this consolidation here. I shorted that railroad tracks. Covered into here. That was pretty damn lucky. I was thinking we were going to head lower. But all of a sudden, in comes this W. And like I said, we actually had some people on the site, lower time frames, going, get in there and buy. Algo was like, phew, okay, now I don't look so stupid here. Huge run up. And here's another really cool piece that you should take away from this lecture. Write it down if you're taking notes. Markets almost never move in just one straight line. Never, never, never. I've been at this game 30 bloody years. Notice on the way down, it wasn't just one straight move down to the level. It was one move to sort of like halfway, and then a consolidation, and then a second move down to the objectives. Boom, 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 boom. Initial move, consolidation, secondary move. This is the way markets move. It just is. I always say markets never move in a straight line. Never, ever, ever. It's always a zigzag pattern. So this is I hear a lot of people, and I'd really love to get this message out. So maybe, Chris, you can just mark the time here, right? We'll just try and go through a very quick illustration. So 3, 2, 1. This is the bot setup, and it's based on the principles that markets never move in a straight line. They always have to have an initial move, then a consolidation, and then a subsequent follow-through move. It's just the way markets operate. A, B, C, D. There are harmonic people that hunt this end point up here for a trade location unto itself. It's called a PRZ, or potential reversal zone. Sometimes these ABCDs, there's so much inertia and so much energy built up in here that actually it shoots beyond the 100%. But if you can just try and think of this in the simplest terms, markets love to move in an ABCD pattern. And this setup that you see on the screen, the 66, 33, 0, 100, and then replicating that just like I did with the actual ABCD movement, you can break this movement into quarters, and really this is a trade setup that anybody can do. You see how simple it is. It's just replicating this range, then plugging in 25, 50, 66, and 100%. You're going to try and look for your reasons to get long. And in this particular case, this is actually a very beautiful inverted head and shoulders. Left shoulder, neckline, head, back to the neckline, shoulder, breakout. Could I say that I have 3 higher lows to work with? Interestingly enough, that's sort of the criteria that I need to see to justify taking this bot trade setup. If we drill down to, this is a 4-hour chart, but if you drill down to like an hourly chart, this is a beautiful W, like W after W after W through here. So I think you can make the argument that you had a half decent entry. The bot itself would want you long from 25. In this case, this is what I would call front running the bot. So we're actually going to take this head and shoulders, and if the bot level comes in and fires, then you're like, woohoo, right on. So we move our stop to scratch at 50% of the anticipated move. We can actually start locking in profits at 2/3 of the anticipated move. And maybe through Tuesday, Wednesday, Thursday as a follow-up, maybe we'll track how this does. And ultimately this setup, and this is just basically working off of the premise that markets move in this ABCD pattern, this market's actually suggesting it wants to get up into this $31,000 area. And as I had sort of pointed out off of the weekly and the daily charts, there's plenty of reason for the market to move up here. So it could be something along the lines of buy the rumor, sell the news. The market is setting up itself for a top off of the market structure, that megaphone top pattern off of the top here. Interestingly enough, for those people who are volume profile fans, if we just look at this particular price range, this, just the profile itself, you can see is, it ideally wants to look like a parabola. Oops. So, we can, let's see if I can do this for you without losing my head. We can draw a nice little parabola off here. We know where the point of control, or the POC is. And we're just going to put the parabola's middle right over the POC. And that tells you, just looking at this simple range, do you see how the market, the profile's kind of empty up here? We could really use some action because the profile wants to look like a parabola ultimately. This also suggests too that, once we do explore up into the top of value, or actually we are well above value, but the top of the potential parabola, if we do get any signs of rejection, remember we have that megaphone top level up here, maybe this turns into some sort of crazy head and shoulders top like that. That could very easily be the case. And we won't get into predicting how the top's going to look like. I think if anything, you probably just want to let this play itself out. If you were fortunate enough to get long off of this consolidation zone, I think it's probably a good idea to ring the register a little bit up top here. As I said, this can go 127s. Hell, it can go up to 1.618s and still technically be valid harmonic. So you can see she's got a head of steam behind her. I was actually having an interesting conversation with the site members before we started this video. here's another really cool tip. So here's another note maybe, Chris, you can make. This is a bigger formation that's already underway. You can't really take buy here and say, well, I'm trading this bullish bot and the target's 31,000 and my entry's 25,000. Well, no, it isn't. Your entry's 28,000 now. So that doesn't quite work. So obviously now it's a little bit difficult to come in on the long side here now. How would I approach this if I really wanted to try and get long? And I think the simple answer here for you guys is hopefully you notice that there was a bit of a consolidation in here. So this consolidation itself might have set up an entry for you. And I don't really want to get into it too much into these weekend shows. So I'll save this for the daily brief tomorrow, but I think that looks something along these lines. This is your hourly chart. The reason why I didn't take this setup, because I mean, it's so perfect. I mean, 1 low, 2 lows, 3 lows, beautiful double bottom. Another good example of front running that bot. But we didn't do a 33% retracement here. So that was the only reason why I didn't hop in on this. I suppose you could argue that we could have maybe even just drawn it off of there. So then that would have actually given you a setup along these lines. But like I said, I don't really want to get too much into these lower time frame charts on the weekend show. But you can see how that might work. So again, that's going to paint off the lower time frames. Targets up into that 30,000 area. And that's a way that had you missed the original entry, which was down here, and it was just such a killer level, had you missed that, so how would I use this bot setup that I've learned to trade with TRI? How would I use that to get in on a move that's already well underway? The answer is drill down to lower time frames, hunt for these consolidations, and you can see how the levels set themselves up. So that's kind of a cool illustration of that concept. So, summary then here today, I think is clearly in the short term, we're still pointing up. And I hate to say it, I do like the idea of us working our way up into this 31,000 area. If I understand correctly, just over the past few hours, there was a big Swiss National Bank, probably was a parliamentary thing. Hell, probably even well, I won't make a joke anyway. Big brouhaha about Credit Suisse being nationalized, I guess, or bought out by another big corporation. And is there going to be some sort of bailout or something associated with it? If anything, I can use Bitcoin's price action itself to tell me what just happened there. My hunch is Bitcoin saw that, oh, well, what a big surprise. The higher-ups just decided to go... Who can finish that statement? 2 letters. Second letter is the same letter repeated 100 times over. Do I have an image of that? I think I had an image of him here a moment ago. But I get the impression that basically the market, this is what I think the big sort of brouhaha du jour right now is. What the hell are they going to do about Credit Suisse? But I get the impression just looking at the price action of Bitcoin, Bitcoin sees this, right? Now, very good. Let's see who got that. Oh, yeah, all of you got it. Kevin, all of you, Kevin. Kevin, I get the impression Kevin was like, I know the answer. Nice job there, Kevin. Okay. So, I mean, let's see what the hell's going on here over the next few days. I don't know how they're going to take her. Hey, you could see, I mean, hell, we're 21, and the target is roughly, 28, and the target's roughly 31. Hell, that's another 10% easily. You could, in fact, remember I had said earlier, what did I say was the hallmark for when the S&P how do we say this? What's the hallmark that we see out of the marketplace to tell us that the end of the move is here? And I kind of maybe didn't really explain that very well. But the answer is, like in the stock market land, you know that the end of the down move is here is when you see the S&P 500 or you see the Dow down or up just absolutely insane amounts. That's usually a hallmark that it's the end of the move. And then conversely, I would also say on the upside. So it has been interesting. There are, I mean, I haven't even looked at it, but let's go take a look at crypto land. Let's see what's going on. How are we doing on time? 11:51. If it's 12:51, I should be okay. All right. So we still got an hour to do Q&A. If anything, maybe you can mark on the timestamp that at this point we jumped over and took a look at some altcoins, I guess. Chris, I don't know. Interesting. This little one here, this Pulse Bitcoin. I actually wouldn't have a problem going in and actually buying some at that 78.6 there. I actually have a whole list of them that I've looked at, and I said, okay, I want to buy you. You can see I've got the alert set. I want to buy you. I've got the alert set. I want to buy you. Got the alert set. I want to buy you. You guys notice a bit of a theme here? I want to buy you. Alert set. I want to buy you. Alert set. I think I told you earlier, 5s and 6s on the weekly commodity trend survey. That means I want to be long crypto. I want to buy. You know what? This is the market. How does that go? How does it go? BTFD, I think it is. BTFD. I think that's how it works. That's what this market is. You know, seriously, if you're going to take something away from these lectures that I do for you, this is why I like using this system so much. Can you see how this is the dip? With the moving averages crossing bullish on the weekly chart by the nip. That's what this is. That's exactly what that image is. I'm not going to say that's easy, don't get me wrong. And hell, I even missed this damn trade off of this bottom. But that's basically what that image is. When the moving averages are bullish, and actually we do have OW down here working technically, you got to step in there and buy the pullbacks. So that's kind of what I want to do here. Some names I bought recently. It's nice to see. W's are coming in off of the 78.6. This was a higher time frame 78.6 level that I wanted to be long off of. So that was good to see. There's no guarantees on the management on any of this stuff, and you all know that. But wow, look at this Ren. Ren's taking off here. Oh, bastards. Look at that. If you had the order at 78.6 working, god damn. Look at that. God, jeez, I ain't great. It drives you nuts. And you see that. Again, if you are self-teachable, self-taught, and you want to just watch, take screenshots of this, right? In fact, I like to, you can see the W's here, but I like to call this, in fact, let's see if somebody knows what does BFF actually stand for. What is a BFF? Cool, Kevin. Awesome. So, Kevin, what the hell does BFF stand for? Thank you, Nori. Good. Hey, you guys. Well done. And look at that level, people. Look at this. You can't write better fiction than that. You just can't. That's crazy. Chris, is there any way we can do a short off of that? I don't think I was too long with that, eh?
I can try to work something up. Don't think
I mean, that's, I mean, I don't want to swear. So how do I say that? Folks, that's the fecal matter. Right there. You like that?
That was pretty good.
All right, so maybe we can spin that into a short. But gee whiz, look at all the damn green. What the hell's going on here? God damn rallies. Tell you, I pulled one out of my butt here the other week, right? Actually, not on that one. There. Man, that was a killer trade. Looks like she's finally bottoming and turning back up. If anything, I got my order to buy it back. Go a little bit lower, please. Like I said, I recently bought this one. I was feeling pretty good about that. Geez, we could just go through them all. The issue here, though, is actually interesting. Well, this one's gone beyond 66, so we have to kill the bot setup there. There's 78.6. Nice little stab against here. Maybe following the Fed. That might happen. That would be a nice treat. Got bids working on this guy, but it looks like he's a million miles away. I'm going to miss that one. This was a sweet trade. Look at that. There's another good example. Chris, can you see that? I think I've talked to you guys about this recent purchase. So there's Brian's favorite fib. I had to take a bit of heat, but not considerable. You could have waited for the fractal bottom, which ironically enough would have fired right off of Brian's favorite fib. So go figure. Digi? I can't remember. I guess I'm working a bid to try and buy some Digi. Cripple? Cripple. Oh my goodness. Cripple looks good. I would like to try and buy some more. I did buy this double bottom. You know, it did spit up a 6 on our weekly commodity trend survey. I don't know. I get the feeling Cripple looks good in here. That's my feeling. For whatever it's worth. Remember, folks, and actually I even put a tweet out to this effect recently. I'm never going to tell you what to buy and sell. And because I'm so irreverent and I'm such a pain in the butt, and I swear too much, and I don't play this sort of game very well, you know, I'm blatantly honest and brutally, straightforward with you guys. If I think you're an idiot, I'll tell you right to your face, and I often get punched in the nose for it. So that we don't really do any of that sort of shill or this episode sponsored by the good people at blah, 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 blah. Their products are the best. If you ever want one of these, this is the one to buy, right? Hey, you know, what's interesting is I really wanted to get those Coinigy shows back up and running. I did those videos for them and I haven't heard anything back. And like I said, probably their corporate guys looked at me and went, ooh, I don't know about this guy. I don't know. We're straightforward. We're honest. We don't really get a hell of a lot of views, but please hit the like button, subscribe, hit the notification bell thing so that you get notified when these videos come up. I'm extremely consistent. So I think you're going to, you know, every day, Monday to Friday, we do a 9 a.m. Pacific time video for the public, which is like supposed to be like a half hour sort of summary of what I see going on in the market. You know, every Sunday we do this. So, yeah, I mean, I'd love for you guys if you could do me a favor to get the word out. Get the good word out. Well, yeah, we got about 60, 70 people watching. There's a few people in the lounge here with me. So, you know, and we got $16 in donations today. Thank you, guys. You're sweet. That's all those Rons. I think I want to go long Ron futures. All right, so some of the other alts I'm in. I bought a bit of this EOS. What a pretty W. Didn't quite do a 78.6, so I can't really add, but I like him. I was in his ARPA. This is the one that everybody got. Sell halves on a double. Orders filled over the weekend yesterday. And I was barking last week. I was like, holy crap, get ready, folks. This thing's going to go crazy. By the time I woke up yesterday, though, the rally was already pretty much over. And, of course, Brian didn't have his open order working. Tisk, tisk, tisk. This is the one that I was telling you guys about. You can add a beautiful application of Foggenbaum here. So you can see we banged into 4669s. Had to come back down. You can see tried to accept 2.618s. Moved back up. No, just no steam in the engine. You might even argue into all of these wicks. You see, do you guys see? Here's another awesome learning tool piece. Make a note of it. Take a screenshot. Where do we say these guys are sleeping when we see these kind of huge wicks? Who are these guys and where are they sleeping? So if you know the answer to that question, then you can kind of understand why the market went zooming up into this level and then just quickly smacked right back down. Because these guys, this is their, oh, thank God, get me the hell out of there. The wife literally, I haven't made love to my wife since last August. And now, hey, I'm gonna get some tonight. Woohoo! And sadly, I mean, I was basically married to my wife for 18 years, so I lived that life a very long time. And so I learned from the school of hard knocks. Anyway, so pretty fortunate to get in again. Fantastic, absolutely beautiful example of why Brian likes this 78.6 fib. I mean, you just can't get any better than that. Again, this is the fecal matter, folks. I mean, it is. It just is. They always say the proof of the pudding's in the eating. And I mean, right there, if you had just drawn this up, put your order in there and got filled and you saw this, you'd be like, oh my God, I can't believe what just happened. I'm an institutional player now. Woohoo! Anyway, hopefully that's some positive mental attitude, some PMA for the universe, trying to make a positive difference in this world. So anyway, that's a review of some of the names I have on the books. So it is past noon, so let's get into the Q&A. And this is the opportunity that if you guys and girls and houseplants have a question, you've ever say like, hey, I want to ask this. Oh, was there 60, 70 people here? Oh, look at that. We dropped off. Well, I must have said something wrong. Anyway, feel free to ask. This is your opportunity. Actually, I see. So I'll make a comment there. I'll just get myself into trouble. Bitcoin, bull market. Woo! Look at that, man. Ooh, strong Red Bull. Okay, where is the questions document? Bam. Bam. All right. Now we got 3 questions. If you're on the site and you want to ask a question, feel free to pop in, fire away. To $27 billion. Wow. That's what that wallet's worth now? Jesus. All right. Question number 1. Hi, Brian. On the Wednesday DB after party, you talked about how ZQ1 ! Has a negative correlation with interest rates. ZQ1 ! Okay. How does this instrument actually work? For example, is it a short-term bond future such that if interest rates go up, the price has to come down? What the hell is ZQ? It sounds to me like a futures contract. Probably to get a better understanding of how all this stuff works is you probably should. Gotta be interesting to see where the hell this thing opens up. Look at that. It's already called 1989 to 1993. So it's going to gap higher about $10, $15 right out of the gate here in a couple hours. So Bitcoin jumping, gold jumping. I get the impression that this bank crisis is not over yet. All right, ZQ. Where the hell is ZQ? ZQ. There's ZQ. ZQ. Tastes great. What do we got here? Fed funds. Boy, what a mess. That was really weird. I watched a Larry Williams video this weekend, and he had Fed funds going back to like 1970s. And I was like, where the hell is he getting that data from? Couldn't figure that one out to save my soul. Maybe let's look at a weekly chart just so we don't have splotchy data. You can see this Fed funds is theoretically supposed to be, there's the weekly chart. This is supposed to be nothing more than what does the cartel, the interest rate setting committee, and of course, in 1913, the U.S. Federal Reserve Act was passed. And so since then, this committee, this board of private banksters, i.e., it's a cartel, folks, which is kind of sad. Do they actually? Would a cartel work in your and I's best interest? What do you think? Let's take a vote on that. Let me know in the comments what you think. Do cartels work in the public's best interests? Anyway, they have been basically granted the authority to set what is the interest rate that is paid on short-term paper that this federal funds committee board will pay to issuers. So, in essence, this is the lender of last resort. That's probably the best way for you to describe this. It used to be the lender of last resort was whoever sort of the hegemony currency de jour government was. Probably it would be better for you to understand how short-term interest rates work and how these central banks work, their functioning, the implications of who's in control of these things. Remember Rothschilds famously saying, I don't care who the government is. If I control the money, I control the country. And frankly speaking, he's right. Because ironically enough, the most powerful man in the world right now is not Joe Biden. I think Joe Biden's close to death as it is anyway. But he's actually nothing. Joe Biden's actually supposed to be nothing more than the lobbyist for the people in the U.S. Congress. That's technically what the President of the United States is supposed to do. They're supposed to go to Congress and say, hey, I represent the people, so do this or do that. Of course, it's been completely bastardized over the past couple hundred years. But anyway, most powerful man in the world right now, of course, is this guy. He is the chairman of this cartel and their Federal Open Market Committee, or the FOMC, who sets the Federal Open Market Committee. Of course, I like to call it the FUMC. But that committee sets what is the rate that they are going to pay on this Fed funds. Now, try and think of this as this is a piece of paper that I am going to buy from this committee. I will hold on to it until maturity. So right here you can say this is 30-day Fed funds. So now, keep in mind, this is a futures contract, so it's a derivative of the Fed funds. But just try to understand the actual cash Fed funds product, which, keep in mind, it's only available to probably like a couple dozen different institutions in the United States. And they're falling like flies by the day. But they have this thing called the discount window, where institutions, the lender of last resort, they can go to the Fed and they can basically buy a product with money at whatever this price is, and it will mature in 30 days. That institution will pay you back that product at par. So right now, if you buy the product at 95.27, then your yield over that 30-day period will be 100, which you will get back at the end of the 30 days, minus 95.27, what you paid today. Just do the math. I mean, we don't have to spend a lot of time on this. But 100 is what you're going to get back, minus 95.27 is $4.73, divided by 95.27. There is your yield, or basically just about 5%. That's really how it works. I'm going to give the Fed $95.27, and I'm going to get back $1. And my yield is the difference divided by how much it costs to buy the product to begin with. It's that simple. It's not rocket science. These futures contracts, keep in mind, right, this is ZQ1 exclamation mark. That means that this is the nearby spot contract. These products are used to hedge those cash purchases. So, we can use the relationship between futures products, different futures products, to get an idea of whether the market's stressed. And that's the whole Fed spread you've heard me talk about. It used to be called the TED spread when it was basically the US T-bill rate. They used to be the lender of last resort. Then basically George Bush Jr. and the entire Republican baby boomer generation just basically went in and put the United States government out of business. Basically, you could argue the abuses of the Fannie Mae and Freddie Mac system basically bankrupted the United States of America. And now the United States of America, the only way that it can actually make good on these horrendous debts that they've incurred, and keep in mind, every other Western nation is in bed with these guys, and this is the irony of it all, is the very people that screwed over the U.S. government, they are the people that are now going to have to bail out the U.S. government. And that is basically what this cartel of banksters is, and this thing called the Fed. So they've explicitly said that they would like to put all the regional banks out of business. And keep in mind, a country like mine in Canada, they did that long ago. And there is a very powerful oligopoly that's in control of my country and the financial system. And I believe that they basically give the government that's in power their marching orders. The marching orders du jour are: the standard of living is going to be absolutely destroyed of the citizens of these countries as the currencies are diluted to hyperinflate the old debt out. Keep in mind, no bankster gives a fuck about the value of an underlying country's currency. That's just a product that they can use to leverage profits. And that's a conversation of lost another loan to Ditech. So if you all remember those days, that was basically the banksters just selling away the future of our society. I do find it interesting that Canada never did have a housing crisis in 2008. So why would Canada have a quantitative easing program? There's no logic behind that. Unless this is a coordinated global effort. So I see you guys talking about Credit Suisse over there on YouTube and the bailout or the buyout or whatever the hell you want to call it. I would actually make the argument that this is all, it's the Rothschilds. It's really that simple. It's not rocket science. It is the Rothschilds. They controlled the European central banks easily. That was an easy win. It took till 1913 to get control of the U.S. banks. And it turns out that actually the Rothschilds are a primary owner of J.P. Morgan, by the way, if you didn't know that. And they were in 1913. Of course, Canada as a proxy of the Bank of England. Keep in mind, we are technically still part of the Commonwealth and all that. They completely dominate our society. So this is basically, and the interesting thing is this is a function of Klaus's Great Reset. Everything that you see happening actually is all part of this Great Reset plan. So anyway, there's a little side rant for you. Kevin saying something over there on YouTube. So cartel is great if you are part of one. Yeah, tell me about it, Andrea. I mean, if you are an oil sheik and you are part of that cartel, how's life been over there in the Middle East these past 20 years? I mean, they're still trying to build like the world's biggest skyscrapers, right? That's usually a function of society's wealth, is who's building the biggest skyscrapers. And you can, I don't think the United States of America has built a big skyscraper in quite a while, eh? Anyway. Works great until someone put your head on a pike, yeah? Well, and that's, like I get the impression that the 1% saw that potential in Mr. Trump. Interesting how Trump's camp is now front running the media, suggesting that Mr. Trump might be arrested, kind of like, well, I think it's all about the Stormy Daniels payoff and stuff. So it's an interesting sort of odd case about a porn star and hush money. So it doesn't really have anything to do with the insurrection or anything like that. But he is preparing the public that he might be arrested in the coming weeks. So interesting how we're talking about all that stuff. I wouldn't be surprised if that insurrection attempt, like if the Capitol actually did catch fire, because somebody did try to set a fire. If the Capitol actually did catch fire and CNN was broadcasting the Capitol going up in flames, woo-wee, that would have been, that might have been the catalyst to trip things. That fire never was able to catch, and as a result, he didn't, and who knows what his motives was through all that. But you might have seen a situation, and like Henry I in English history, basically the same kind of crisis. Money was worthless at that point, and the banksters, of course, were running roughshod. And he came along and said, "Off with their heads," of course, and killed anybody who was in his way. And he introduced the tally stick system, which you might argue that Bitcoin, in a weird sort of way, is a digital version of the tally stick system. So, like I'm a huge fan of Caitlin here. And I believe that Caitlin would really like to try. Keep in mind, I think this guy, he hates people like Caitlin. That's my opinion. And maybe not so much, I beg your pardon, maybe not so much JP, but definitely Granny over at the Treasury. I think she absolutely hates people like Caitlin. I'm a huge fan of Caitlin because technically if she can do what she wants to do, she's going to create this tally stick system for the banksters to try and hold them to account, with us moving basically onto the blockchain and moving away from this horribly corrupt banking system that's been rammed down our throat for basically the past, 500 years? Watch the Money Masters videos. So, anyway, good luck, Caitlin. My fingers are crossed for you. I'm just reading the comments back here. So UBS has been basically bought out Debit Swiss. I heard that Justin Sun guy said he wanted to go and buy out. He should have gotten into a bidding war with UBS. Wouldn't that have been hilarious? If Justin now comes out and says, "You know what? I'll give you 2.5 billion. You want to talk to me?" It'd be interesting to see what Credit Suisse shareholders would do. That would be hilarious. But I'm only paying you in crypto. That would be so funny. That would be hilarious. Anyway. So what are you saying? Accordingly, the Swiss government gives UBS a guarantee of 9 billion Swiss francs to cover possible losses arising from certain Credit Suisse businesses in the event of their losses. Yeah, so you know what that is? That's brrr, right? We gotta have a good soundbite for that. Brrr, whatever. Okay, let's keep moving forward here. In about a half hour or so, I gotta wind this up. And then I'll head on over to Liam. So, number 2, Brian. When we have a W, how long do you wait for your order to be filled on a pullback? For example, if after a week or a month there is no such pullback, do you say that it is time to close the order, or maybe you never close the order until you see a new W or M that destroys the previous W? Also, do you periodically check the chart when you are waiting for the order to be filled? Thank you. Yeah, I mean, first and foremost, remember, Mr. Level 1 student, I would ideally like all of you to be rational analysts. What does rational analysis mean? You are buying these assets because you believe that there is some sort of fundamental value, fundamental reason to be long. All right, take it easy, Kevin. Thank you for your participation today. Great to hear that you have enjoyed your time on the site. Hit the like button, subscribe, consider joining our website. I think, actually, it was interesting. Sjord's the other day, I'm sitting here going, I don't know, maybe I've lost my cash. I'm surprised. Cachet, I guess is the right word. I see all these social media influencers and stuff, millions of views and hits and likes and whatevers. And I see other people who have built sort of online crypto shill platforms, bazillions of viewers, like hundreds, if not thousands of students in their education programs, which I don't think hold a candle to our education program. And our education program is actually cheaper. And I'm just sitting here going, what am I doing wrong about this? I just don't get it. So, but Sjord's like, I still see a lot of value in just being part of our community. We're a PMA community. Nobody's out to shill you to buy anything. Yes, this managing money professionally is difficult. It's a hard job. It requires a lot of patience and discipline and just waiting. I think we're in an opportunity now where you do have to buy. Keep in mind, I spent like a year there going, I can't buy anything now. I can't buy anything. I can't buy anything. I can't buy anything. And now I'm actually showing you stuff that I'm actually buying. So, but Sjord's like, Brian, I think your rants, I think there's value in them. Anyway, consider joining our site. It's a pretty nominal fee just to participate in the site as it is. And of course, the site itself is still very much a work in progress. So we're constantly building and we're constantly adding stuff. I think the algorithms are operating really well. So also too, I forgot to mention this. And maybe Chris, you can make a note in the notes. I've had a few people that are like, Brian, we really want to do a boot camp this spring, maybe this summer, this fall. I don't know. We're kicking it around. So I am thinking about hopping over to Europe and just hanging out in a Airbnb for maybe a couple weeks and basically running the day trading program, our battle stations room live with students and going through what I consider all the requirements to set yourself up to be a day trader, and then spending a week watching you in action and just critiquing and polishing your plans and just working with you. So if you are interested in that, please tune into the daily briefs. We'll talk more about that coming up. And they've got about a half a dozen people lined up. So if you are interested in participating in that boot camp, please let me know. We might even do it this coming May, which is in a couple months. Some of the guys are super jazzed. And then we'll probably also do another one this coming fall. Then that way, that'll be sort of like pseudo my vacation, kind of like what I did with the meetup last year. It was kind of a fun sort of working vacation, if you will. Give Brian a little bit of break from crazy Vancouver. So anyway, point being that we actually spent Saturday hashing that out a bit. And everybody's like, yeah, the content looks great. We'll be really gung-ho. So anyway, let us know if you are watching this video. Please let me know if you are interested in at least getting more information about the boot camp and what we'll be doing. Also, too, and I was really surprised about this, but Zach was thinking about doing a 3.5, sort of an add-on program at the end of the level 3 program to really explore the option spreads and to give you specific step by step by step. This is how you do it. This is some of the trades that I've done. These are all the various different strategies that I use. And actually, I'm quite surprised. We needed a good dozen people to justify that program, and it looks like we've got it. So we're just sort of hashing out how we're going to approach that. But if you are interested, if you are a TRI alum and you're watching this and if you know Zach, if you don't know Zach's, maybe we'll even get Zach to come on this Friday's Daily Brief. But Zach is just, he's so awesome. I love working with all these TRI people. I think I've told you that repeatedly. They're just the greatest people. So we've got a few projects in the hopper here. And then, of course, all the various products that we have anyway, I think justify the site participation and membership. And we do have a 30-day program. So by all means, a free trial. So by all means, pop on the site for 30 days. If you like what you see, maybe stick around. Maybe we can even convince you to join the raffle for our upcoming school term. Hey, Chris, we got that the link to the raffle page handy, so I can just show people that page. I'll throw it on the YouTube page too.
We do. If you look here in the Zoom chat,
Oh, there it is. Awesome. You are awesome. So copy. So I think this is an excellent page just to get to know us a little bit. No obligation. You can see our next program starts in about a month and a half or so. We have a raffle, so feel free to throw your name and your email address in. And if you want to go through and just read what people have said, and I have to say, and also too, some people have sent me some really, really positive messages privately, and I would ask you guys. I can think of one guy in particular who recently sent me just the most beautiful message, and I passed it on to the team, and they really loved it. And they're like, go to Trustpilot, just put that message in there. This way this social media stuff works is you have to get it out. So if you are a TRI alum, if you are even just a happy customer, we really, really appreciate the Trustpilot referrals and comments and votes. I think on balance, we got a pretty good, I'm not quite sure where the hell the link is to show you that, but I think we have a pretty good rating with these sites. So anyway, point here is this is a great way for you to be able to see for yourself what it is that we do and why would you want to participate. I'll throw that in the chat room there on the YouTube video now. And hopefully Chris has that in the description. Like I said, hey, man, maybe you can win a free seat to our upcoming school term. Okay, so back to this question. Sorry about that. It was about a 10-minute sales pitch. The answer is, I think that really it all depends on what are we talking about. Are we talking about like a W off an hourly chart? Are we talking about a W off of a daily chart? Are we talking about a W off a weekly chart? W off monthly chart? We'll start with the easiest. A monthly W, that's obviously going to resonate with me. And most often, when we see these bottoms and things like Bitcoin and stuff, where's the price chart? Actually, here, why don't we, we'll just use this. When we see these weekly bottoms, they're pretty powerful. They speak volumes. And, what might be interesting, too, is we might even look at this and now even see that turns out to be a monthly W. It's possible. Carries a lot of weight. And then based on the actual time frame of the W, that's how we sort of fit that into our sort of trading plan. So, I always recommend, especially sort of new people to investing, and I don't have a problem with saying that this is a recommendation. I mean, technically we're not licensed, but I've had it very hard to believe anybody who actually follows this loses money. If you remember, I was fascinated by this. Maybe you people don't know, so let's just maybe get this out for the record. What are Brian's 2 rules of investing? Number 1, we want to work with some sort of algorithm, some sort of if-then-else statement that justifies us actually spending money in the marketplace. And we all know Brian wants you to have 3 unrelated reasons. So it should go if this, and this, and this, do that. Else, don't do anything. That's really the whole secret to making money from trading. I know it sounds crazy, but it's just that simple. I would ideally like for your reasons to be unrelated, but I have seen lots of people do really well with if I'm in a reload zone and it's trading at 78.6 fib and there's a big fat weekly W, well, there's trade location, candle body lows, or something along those lines. Well, I'm going to pull the trigger. That's how a lot of these 78.6 fib buys that I just showed you there a few minutes ago, that's how they're framed. But it's an algorithmic process that gets you to buy. And if you want to include the W in the algorithm, fine by me. Maybe you want to do more reasons. We always say if you can find 3 unrelated reasons to justify taking trade, you probably can find 4, 5, 6, 7, and 8. So if you want to say something like, I have to see weekly W's, I have to see that the weekly commodity trend survey is giving this a 5 or a 6 for me to even be interested. And then once this has happened, then I drill down to a lower time frame and I say, all right, show me a W. There's nothing wrong with that. If you want to keep your open order working at that W level, that's fine. I don't really put a stopwatch on the trade. I will say, though, that if the market starts moving away and even up into things like, in this case, higher time frame 38.2s, but also 52-week reload zones, well, then I probably missed the trade. And it's probably a good idea to cool your jets. Maybe you don't necessarily, you can still work the order at the W level. I think I showed you, I've got a bunch of altcoins where that's basically the case. So, not that one. We won't mention him. But there's where's one that I do have a bit working? Digi. I suppose Digi's a good example. So you can see there's a cute little W down in here. Even bigger weekly W's. Do I have a stopwatch on when I'm going to pull that order? Not really, because for this account, I'm doing it little old lady risk management, so I just want to get filled at the bottom end of the range. And if I have to wait a month or two to get my fill, okay, it's not the end of the world. Same sort of thing here. Would I put a stopwatch on trying to get in off of this fib level? Not really. If I was leverage trading or margin trading and this thing had moved up, what I would probably do, which is kind of what I am doing right now, is I might pull the actual buy order like I would normally, just have a bid working there. But if this happened, I might just say, all right, maybe we'll pull the bid because I missed that stink bid level. And if this thing actually does trade back down here, I'll set an alarm and then I'll just watch how she acts down against this level. If we, of course, break this low, then that's lower highs and lower lows, which means that maybe we haven't actually had a W come in yet. Usually what ends up happening with something like this is it'll do that, and then it'll start working its way up if it's still a bull. If, however, we come back down and take out that low, you might still have your counter trend rally, but then it probably is going to have to do like a head and shoulders, and I want to see if I can sneak in off of that level there down the road. I'm not really going to say there's a right or wrong. What I like to do is I like to sort of slowly move my way into a name. So maybe, we're going to figure out, number one, what's the size of my stake? So then by definition, that defines what's the size of the risk that I can take on any one single trade, right? We all know how this works. Take the level 1 education program if you need some help there. Then I'm going to decide, okay, based on the amount of money that I can risk on this particular trade, what's my temperament? Do I want to get stopped out? Or that's not the right word. Am I okay with getting stopped out? If I'm like, I can't psychologically handle having to get stopped and take a loss and, hop off on the sidelines, and maybe I'm going to be skiing in Aspen and I just, I'm not even going to be paying attention. So no, don't bug me while I'm out, in the Bahamas on my sailboat or whatever. Then that's definitely going to dictate the type of risk taker you are, which is going to dictate type of trade you're going to take. So I can't answer that question for you. I just can't. But little old ladies, we're just working bids, trying to get as long as possible. Would I even have a problem even now just having a stink bid working at 78.6, seeing if I can get in on a probe of these candle body lows? Yeah, I wouldn't have a problem with that. If anything, the ideal scenario now is, and it could go back and forth. I mean, I could just work a stink bid, but I'd have to be okay with it coming down. I mean, maybe, you never know what the hell's going to happen on the other side of this FUMC. Trust me, folks. I mean, we could be talking a week from now and Bitcoin could be like substantially lower. You just don't know. I mean, maybe we do something like that. It's very realistic. So me getting filled here, and if I didn't have religion and say, you know what, I'm going to limit my losses to here, this could be like the same situation as the guy sleeping on the couch. You might be long from this level. This thing goes all the way down here and sits here, and you're just praying for some sort of spike back into that level to get you out. So you're going to have to decide what type of risk taker you are. I can't answer that for you. Based on the risk taker, that will determine how aggressive you are with working stink bids and working orders. Little old ladies, and I don't even mind, and this isn't a bad example because you can see there is a cute little W that's right down in there, right? So was this nothing more than just a Wyckoff check of that? I think we broke out through the top here. This one's awfully close. 92, 92.2. Woo! So technically, this is a W. This would be the noob stop, so you would expect to test to these lows anyway. But this is, Brian's favorite fib. If you had your bid working there, you'd look like a genius. Look how long you had to work that. Took a while. So, if anything, and I know you're going to hate this answer, the correct answer is, if you are interested in this strategy, I want to see you go and book 100 paper trades. Or maybe at least 20. Just say, well, how did it work? For me, psychologically, could I handle the fact that maybe this position's got to be underwater for a while because I didn't set a stop and I just had my buy order there? Can I handle that kind of stress? Some people can, some people can't. Would it be prudent if you're trading this and you're kind of like, well, I don't mind and what I want to see, Brian, is I want to see a W. And ideally, of course, what we really want to see is can we at all somehow get a W within a W? Those are the best setups. Something along that line. So you set your alert. Well, this has gone off. Maybe set another alert at 78.6 candle body lows here now. So rant, things goes off. You're all like, okay, I'm ready to go. Maybe you just go and buy like a third of the desired position at the 78.6, Brian's favorite fit. Then if the W comes in, great. I'm going to go and add another third on that. Or maybe screw the stink bid and I'm going to wait for that level. Just as long as it comes in through the reload zone. Nothing wrong with that. These are all perfectly valid. Hell, you could even say, you know what? I want to see the W. I want to see the W actually come in. So I'm going to wait for this whole pattern to confirm. Boom. Then I'm going to draw my reload zone and I'm going to wait and see how price acts in here. There's nothing wrong with that. I like the idea of you trying to think about trying to buy against the bottom ends of ranges. How exactly you are going to get in here, that's the whole point of the education program, trying to teach you a whole bunch of different ways for you to justify participating. And then what we got to see from you is we have to see you actually paper trading and trying all of these different things. Maybe you're the type of person you like working stink bids here, and you're like, I don't really have a problem with that. But after this level's been hit, maybe we trade to this trend line. Maybe you get to the point where you say, if I see this lose this level, then you know what? I got to see a W. But the problem now is because we've broken this, notice, did we get actually a sell signal here? No, we never did get the M on the other side of the trend line. So no sell signal. Do we get an M underneath this trend line? If we do, I don't know whether I really want to work my stink bid. So I'm going to set my alert, let that go off, let the dead cat bounce come in. Brian, fine, you bought that level, that's fine. But I want to see, number one, I do not want to see an M below this trend line. If I do, then I go into super conservative mode. But what I really want to see is I want to see a big W here. And then I'm going to buy the reload zone test. And actually, this is a setup that I was watching on YouTube yesterday. Yesterday's my day off, so I spend it practicing trading. Nice life, Brian. Anyway, so in this particular case, there was a guy yesterday. This is one of these internet influencer guys. And then another guy who took his course is doing his whole channel, and now he has a bazillion followers. I mean, it's so funny how this stuff works, but nonetheless, it's a pretty valid setup. Want to see anecdotal evidence. The pattern sort of goes like this, where what you want to see is bearish structure. So the market's making lower highs and lower lows. It makes a lower low at a key level. Maybe it's 78.6, maybe it's new lows, whatever. Then it comes back up and it breaks this previous market structure. So now no more M's, right? That M's been broken. And then on that move there, that's when you go and hunt your entry. Whether you hunt a little W or whatever it is that floats your boat. Maybe it's a fractal. Maybe you just buy 78.6 levels. But that's another way to approach entering. This is off of things like 1 minute futures charts through the New York kill zone, that kind of principle. That's a very popular trading strategy. And the key there is, no, I'm not just going to work a bid at a level. I actually want to see price itself start to give me anecdotal evidence that the trend has actually turned back up. So I don't know whether that answers your question. I think the very simple answer is every single situation is going to be slightly different. It's going to be entirely predicated on your plan, what type of risk taker you are, and how much anxiety you incur playing in the market. The more anecdotal information that you have to justify you thinking that there's a bottom, i.e. W's in price, divergences in momentum indicators, divergences in volume indicators, divergences in volatility indicators, whether it be levels, Foggenbaums, Brian's big fat fibs, Brian's favorite fibs, sorry. That we need to figure out is all about you and how much anxiety you incur as a market participant. And I can't answer that question for you. I used to work with a guy, I always tell you guys, Brandon Rigo, probably one of the best crude oil traders I've ever worked with. And he would just hit 61.8s, like not even thinking twice about it. I suppose it's going to take too long to give you an example. But that's just the type of trader he was. Just hit those. If I see a W on a price chart and I draw my fibs and the W lines off the 78.6, it might be months later. And I'm okay with taking that because that's a shark setup in our library. And if it's like a weekly chart, hell, that's even better. So I hope that helps answer your question. I don't know whether there is no really right or wrong answer to your question here. It's really a function of we have to work with you to figure out what type of risk taker you are. And then how many reasons do you need to justify acting? Ideally, we have 3. But are you comfortable with just working stink bids at levels? Some people are, some people aren't. How many, like brand new people to trading? I always like the 3 unrelated reasons: location, indicator confirmation, price structure. That sets you up for the least amount of anxiety. But like I said, there are guys that just trade levels, and they're obviously a little bit more mature. So that's my answer for you. Okay, number 3. You mentioned the document about trading crypto until the end of 2025. Is it ready to be shared? No. Still a work in progress. I think actually that's this document. Actually, I put it on the sort of side burner. I like to do this where I just do like an absolute orgy of work, and then I just let things sort of simmer for like a little bit, and then I come back and I review what I've put down, and basically to pick it up, and then I'll go. My plan here is that I still think 2023 is a basing year. Do we come up and just tag 38.2s, 50% levels, all that kind of fun stuff? Just a very technical basing pattern here. As this image suggests, we could easily have a rally to, what is that, 35,000, just to do a normal technical bounce here in Bitcoin. Of course, the public's going to see that, and they're going to be like, this is a new bull market. I don't think so. I don't buy it. And if anything, be damn careful after Tuesday, Wednesday. So I'm not really in a huge hurry. If anything, I probably, the public statement that I gave was I didn't really want to disseminate this until probably about May. Because usually May is a pretty good seasonal troughing period. Sell in May and walk away. I did watch a Larry Williams video, and to the person who shared that with me, thank you very much. I appreciate it. I won't talk too much about it. Certainly don't want to get into copyright issues and stuff. Maybe in the after party, we can talk a little bit about some of the conclusions that he had. You know who you are, so just remind me tomorrow or Tuesday. But what I would just simply say is I still think that this is a basing year. I don't think that there's some huge hurry that you got to run out and just buy. What I've been doing is just slowly accumulating. So we do have our little old lady canasta club. I've kind of noticed that some people are and this usually is what happens. So we're working away on the boot camp right now. So that's been sort of front and center on my menu right now. But thought I had it on here. Oh yeah, there it is. We had a group of people that were like, all right, we'll be sort of good role models and participate in the club. And I've been just saying, yeah, this 2023 is an accumulation year. And you can see, there's Brian, nice picture. You can see I'm accumulating and I just keep buying. And I will be. I still got a very big war chest to put to work. So you can see everything. I'm doing it. It's good to see. Stuart's got his list. He's ready to go. Nicholas, he's got his list. TGB Crypto, where the fuck are you? Sharky. Yeah, I know you've been buying tons of stuff. So where are you, Sharktoshi? Chris is in there. He's loading up his list. There's Rush. Rush obviously doesn't want to be too public. There's Zug. Zug's in there. Zug was, of course, the one who gave us FXS, which is a wicked trade. Raph, where the hell are you, Raph? And Eddie, what happened to Eddie? I think this is Eddie's spreadsheet, and here's Eddie's list. So I don't know, you tell me, is Eddie own a couple cryptos? So he's in there doing his thing. So congratulations, Eddie. But I haven't seen you in a bit, dude. A little bit worried about you. And that's the thing, that's half my problem. Just say it for the record. You all know my personal story. So unfortunately, I don't really get along with my biological family too much. I walked out on my mother when I was 12 years old. So that tells you Dutch mothers. Sene reminded me that actually not really liking your parents in in Netherlands and not having a very close emotional relationship with your parents, that's not really that big of a stretch for the Dutch. So it is what it is. My biological, so the other side of my family, my my grandfather on my mother's side was actually the gentleman who was attributed to discovering the Northwest Passage, Captain Rogers. And if you know about explorers, then you kind of know about their temperament. And it also gives you a pretty good idea of sort of their ship captains are not really the most friendliest of people. So, what am I trying to say here? My father's side of the family, oh man, they're socially challenged. So I don't really interact with them. Sadly, of course, my wife passed, and that relationship with that side of the family kind of fell apart. So it's just me and Liam, which is kind of sad. And, since I've been on this adventure with all of you guys, I actually consider like TRI people friends and family to a certain degree. And I mean, it kind of probably sounds corny and cheesy, but there are people that I genuinely love that have come into my life and left, which really sucks because, like I said, you guys are my life in a weird sort of way. So that's probably a little heavy for people to take, and frankly speaking, it's a bit naive on my part to assume that just because your students or your TRI customers that you're even going to like me as a person, which is pretty sad. And I've got myself into some problems in that regard. So anyway, we're human, just trying to do our best. So I take it actually really personally when I work with people and then they end up leaving TRI. It hurts because I've invested everything into trying to make a positive difference in this world. And like I said, I actually use the L word with male to males, and that makes everybody all sort of freaked out and stuff. So I'm kind of a weirdo in this regard. That's half the reason why I won't shill, and I won't like ram some stupid fucking shitcoin up your asses, knowing that you're gonna get screwed. And when we're at the top of the market, I'm pleading with people not to buy. I mean, can you imagine if people didn't buy into the FTX bullshit and didn't buy Sam Bankman-Friedman bullshit and didn't buy Bitcoin at 50, 60,000 and didn't buy when, that jerk went on Saturday Night Live and didn't say a damn thing about, oh, maybe this asset's a little bit dangerous to buy up top here? I mean, can you imagine if we actually had a world like that? Wouldn't it be a nice world to live in? So I get angry at the tops of markets and, I tell you not to buy. Not buy, but don't buy. So I have like 25 viewers, I don't get it. I don't get this world. So anyway, rant, blah, 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 blah. The point is actually I have to get going here pretty soon. So let's wind this up. It is a work in progress. And my tentative goal was to actually start talking about it and promoting it in earnest in May, and probably after I come back from that day trader boot camp. That's probably when I'll really start talking about this and promoting it in earnest. And also to Josh, our sort of TRR marketing guy, he really likes the idea of me putting together like a little sort of like automated little old lady sort of education program and throwing it up on like Udemy or something like that. Just and dovetail it with this document, just so that there's a nice simple online, it's scalable, so we can get the message out to like thousands and maybe if we're lucky tens of thousands of people. How do you play this game correctly? 2023 is a buying window. Go slowly. Buy at bottom ends of ranges. Don't chase. Blah, 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 blah. Right? All right. And the irony of it all is if you actually do that, right? If you follow Brian's 2 rules of investing, it's actually difficult to lose money at this game. But do you think anybody who bought into that stupid Alameda nonsense, garbage, fraud, and even bought SVB stock up at the top there, or any of these regional banks, and chased the market highs? Do you think any of them understand half of what I say? Do you think they follow the 2 rules of investing? I can unequivocally and irrevocably say no. So, I don't actually mind coming out and saying, I recommend you follow Brian Beamish's 2 rules of investing. Because if you follow them, you don't get sucked into all that bullshit crap nonsense. I heard a guy online this weekend say his setup is 80% accurate. And I went through and I backtested about 20 different trades, and I saw that it's running at about maybe 50-60% accuracy. Whoa, what a surprise. I mean, I tell you, if you can get a setup that's, 60 to 70%, you're the shit. And most of the flow traders that the fecal matter. Most of the flow traders that I worked with, they were happy with like 55%. So this guy comes out on social media and goes, I'm going to show you a setup that's 80% accurate. Obviously, he's going to have 100 million followers and 1 million likes and 10,000 subscribers a second and all that. But that kind of talk is setting those people up for disaster. And it just drives you crazy. All right, Andre, take it easy. All right, so hopefully that answers your question. Last question. As soon as this is done, I hop in the car and go. So, Chris, how do you feel? Did we do a pretty good broadcast here today? Did I miss anything I should have talked about?
I think you hit all sectors here today, so good job on that.
All right, cool. Hope you people watching out in YouTube land get some good value for this. The way that we Brian learns whether you feel like you're getting value out of this, hopefully, if you saw something in this video today and go, yeah, I could use that. I could use that to help my trading. Yep, I could use that to, oh, that's a good pointer. Please let me know in the comments, right? And hit the like button, subscribe, ring Colleen's bell. I wonder how Colleen's doing these days. I hope she's doing okay. All right, last question. Last questions. I understand your criticism of capitalism and banksters, but what is an alternative? I believe not communism or Vladdy. So maybe banksters are a necessary evil and we don't have an alternative. Are you a bank employee, maybe? Is your name Jerry? Well, I mean, the answer to all of this, it's really simple. The only problem is anytime whoever comes along and says, okay, enough is enough, let's do the right thing and let's get us back on track, they end up mysteriously getting assassinated. Or they end up mysteriously having an attempted assassination. This is dangerous stuff, like I told you. These guys, Mr. Powell, I mean, you think that his only job in this world is to run this machine, but this machine, don't get in its way. These are bullets. So there is a lot of connection between these people and the various different presidents over the United States of America's history that have tried to keep these people in check, and pieces of lead start flying in their direction and landing. So make no mistake about it. There is a very simple solution to this, and it's just simply, let's not live beyond our means. Hey, there's an idea. Have you ever heard of the expression of the ant and the grasshopper? The banks and the banksters and the cartel in particular, They want us to continue living the grasshopper life. And then you go, well, what's wrong with that? Is it realistic? Why is it that the grasshopper, when it starts snowing, why is it that there has to be an ant that's like, oh, okay, fine, come on in. We'll look after you. We'll give you food. We'll give you a warm shelter. Why don't we just let these grasshoppers die? I mean, that's a pretty bold statement. It's brutal. But that's basically what this all comes down to. So the solution is we have to unwind this horrible mess that this industry and this cartel have euchred us into. And I told you the solution back 1,000 years ago. 1,000 years ago, it was Henry I coming along saying, enough of this nonsense. We're going to create this system called tally sticks so we can tell exactly who has what wealth and exactly where it is. And this whole idea of usury, that's based on the Bible. We're going to enforce that. Enough of this nonsense. There's a whole part of our society, and again, this goes back thousands of years. So, JC himself getting all pissed off at the money changers in the temple. Nothing's changed with this human species. It's exactly the same. And it's the same people. It's a class of society that believes that it is perfectly fine and it's perfectly acceptable to make a living and make a life off of using other people's money to fund their lifestyles. And we're at the point now where the Rothschilds figured this out about 500 years ago. It's way more powerful and way easier to bypass the individual citizens and go straight for society's jugulars or the governments. You control the governments and let the governments control the citizens through this whole concept of taxation. It's in the bankster's best interest to loan as much money as possible to whatever the government is. It might be left-leaning, fine. Pay all your bleeding heart social programs you want. Borrow as much money as you can. Fine, yeah, we'll lend you credit. Of course, you're going to have to pay prevailing interest on that credit. Well, who decides that? Well, we'll decide what your credit worthiness is and then what rate you have to pay. Oh, wow. I don't know whether I like those terms. And every time, Ronald Reagan was famous before he was elected president saying, it's about time we all live within our means, right? And governments balance budgets. And we all know that, literally within a year of somebody mysteriously taking a poke at Mr. Reagan, his entire conversation completely did a 180. Oh, no, we're going to do trickle-down economics, cut taxes on the rich, and governments want to spend more money than we're bringing in. Yeah, I know my vice president calls it voodoo economics, and frankly it is. But what the hell? These banksters say that we have to maintain this reserve lending system. So, and like I said, every time somebody comes along and says, enough is enough, they mysteriously end up with a piece of lead inside them. So the banksters are in full control. And, we had one site member years ago who said that this particular part of the cycle, astrologically and all the planets and everything, the theme of it is consolidation of the power. And I got to tell you, what I've seen over the past 5-10 years, that's basically exactly it. They are consolidating their power base now, and it would take somebody like Mr. Trump to be able to start some sort of civil war to actually dislodge them now. Other than that, I just can't see it happening. They own us lock, stock, and barrel. And what's worse is I'm talking about you guys in the US. A schmuck like me here in Canada, wow, we sold our souls to the banksters generations ago. And we are so screwed. And the guy that just basically came to power now, he just like literally dug another 5 or 6 feet of our grave for us with what he has done over the past 4 or 5 years. And then, in perfect symmetry, because they've got this sickness, and anytime you talk about sickness and mental health, did you know in Canada, you can actually get away with murder if you have a doctor's note. So, you want a reason to be able to do what the banksters want, this hyperinflation, Great Reset, Klaus's bullshit nonsense, banksters, $100 trillion Carney lending, of course, add interest, which means about $5 to $10 trillion a year in income for the banksters. Nice, simple, done. Let's maybe have a health crisis. Then, hey, we got a doctor's note. And Trudeau even, I remember the newscast, he goes, and everybody's like, well, isn't this runaway spending? Isn't this going to blow up the budget? And isn't this going to create inflation? And isn't this going to destroy the sort of standard of living of the typical Canadian citizen? And if you've seen what's happened to prices in Canada, that's exactly what has happened. And he just looks at the person just with a total blank look on his face and says, well, what would you have me do? Right? You can get away with anything if you have a doctor's note. That's basically what this whole sickness was about. So, there's your backdrop. Could we go back to a world where, I don't know whether you like to play video games. I like to play this silly World of Warcraft. And you go there, and in the game, there is a bank. And in the bank, you have a whole bunch of slots. And every time you go into the bank, you can deposit stuff into your bank, and you can buy bigger vaults and whatever. But when you go back to the bank, you see, oh, there's my stuff. It's still sitting there. But in our world that it is right now, you go and put something into the bank, you can turn around, it's not in the bank anymore. It's gone. This is this whole reserve lending issue. And the people at SVB, they put their money in the bank, and the bank instantly turned around. And remember, Granny and Jerry just a couple years ago were like, hey, no reserve lending. You can go out and print as many loans and buy as many U.S. treasuries as you want. And how did that turn out for SVB? Well, that didn't go very well, did it? Or was this all maybe a big trap? And that's actually that's the really evil part about this. Because remember, I told you, the money center banksters, the Rothschilds, they do not like this regional banking system. It's too hard to control so many different banksters out there in the U.S. And I might argue, coming full circle to all of this, what's the solution to this? Well, I don't think the solution is more of this guy. This hasn't worked. System's broken. At some point, it's going to collapse. And of course, that's your Bitcoin. The solution is this lady and what she's trying to do. The only problem is she might get what she wants, and then slowly over time, her dream gets corrupted by these people. And I think that's the danger with Bitcoin right now. And I think that was the danger with people like SVB. Or no, what's his name? SBF. In fact, I might even argue one of the reasons why they chose Silicon Valley Bank to go after was because now people are not going to remember SBF. What was that? Was that bank? Oh, no, that was that funny little crypto kid, wasn't it? Oh, yeah, we're not interested in him. What's SVB doing now? I could easily see that's what's going on, but oh well. It's another conversation for another day. So, the solution is, can we just please have banks going back to what banks are supposed to be? They're supposed to be a place where if you have some wealth and you want to keep it in a safe place, you go to the bank and you put it in the bank in their safety deposit box. They charge you a fee for the safety feature, and that is their income model. Not this fucked up world that we live in now, what it is now is it's just a Ponzi. And all they're doing is it's a shell game. And they're just moving the shell around. And every time they keep moving the shell around, guess what does better? Because I actually think, to be perfectly honest with you, is the 1% that actually brought this Bitcoin thing into reality. And, there's what is it? Swiss credit, debit, Swiss, whatever. Another big bailout. Whoop, up goes Bitcoin again. So there's your answer. And the scary part is I am actually hearing people realistically talk about Bitcoin being 100 bazillion gazillion dollars. And what that means is your loaf of bread is probably going to be, $500 a loaf. Wonderful. Okay, I got to get out of here. I'm already late. So have yourselves a great day, everybody. I hope you enjoyed the edutainment. Hit the like button, subscribe, ring Colleen's bell. Maybe consider joining our education program. Maybe consider giving TRI the kick the tires a bit with a free 30-day trial. We'll carry on this conversation tomorrow in the Daily Brief. PMA for the win. All the best. And bye for now.